Welcome to Bitcoin Escape Plan. What's next for Bitcoin? In this video, we're going to find out. After we recently just dropped to new lows in this market, we want to see, are we going to hold support here or do we need to retest them and break lower? There's a couple key indicators that tell us which one is more likely that we'll go over in today's video. If you're new here, you can go and check out bitcoinescapeplan.com. Every week on Monday, I release a new newsletter where I go over the key price levels that are important. It's going to be more on the website soon. Go check it out. All right, back to the chart. We always start off with the 4-hour chart. And there's something very important that just happened. I talked about this in, I believe, Friday's video. This is the anchored VWAP. I talk about the anchored VWAP all the time. If you are a subscriber here, you know that already. This is the key one right here. This is the upper band. We spend most of our time above the upper band. As you can see, we are comfortably below it after breaking it in the middle of January. We are now touching the middle band, which does not happen very often on the 4-hour chart. So the fact that we're even there in the first place means that we are very bearish. The last time that we saw this in general was 2022, 2023. So again, most of the time that we spend on the chart is above the upper band. So anytime where we're touching the middle band, you know, prices looking a little ugly. So we did see, this is a very important signal. We did see right here, this is on Thursday, we did see that the candles actually closed on the 4-hour chart right above that middle band of the anchor VWAP. After breaking through it over on the previous week and then wicking down to it, and then again closing above it, which is really a very important sign actually for us to know, like, do we have enough strength to make an attempt higher, or are we just going to break down more significantly? At the very least, at the moment, we're showing that we are willing to consolidate. And I really think that it's just going to come down to the psychological levels that I'll talk about a little bit later on in the video. But for the 4-hour chart, what are we looking at? So it looks like we went up in early Sunday as high as 70.9, which is above the, on the daily time frame, it's a 70.2K pivot. On the 4-hour time frame, it's the 69.8K pivot. As you can see, we failed both of them. We did get a couple 4-hour closes above the 70.2K pivot, it looks like, but ultimately are failing to get to 71 or higher. This level right here, this is 71.3. That's a previous monthly close, I believe, from 2022. 2024. So that is pretty important. We are showing there's not a ton below us here. So what we're looking for right now is this is the 4-hour SMA. 4-hour SMA is at about 68.6K at the moment, and we are dropping towards it after breaking out above it last Friday, which was initially a bullish signal after the retest of the middle band of the anchored VWAP. But for the most part, we still are going to see, can we get a bounce at the SMA, which at the moment we are forming a decent amount of volume is actually stepping in at these levels here from about 68.8 to about 69.6. So some people did step in and actually buy, but as you can see, the volume profile is pretty thin between about 70.5 to about 75.9. So it's a lot of volume that is going to have to return in order for us to actually push through these key levels. So what I would expect is going to happen, it does look like we're going to break that 4-hour SMA again to the downside. This has kind of been the pattern recently where we chop above it temporarily and then break down and just continue to break down and just continue to break down. This is really the first period of consolidation that we've seen since those breakdowns have been occurring since basically late January, essentially. And of course, much longer than that if you've been following the channel since December. So 59.9 is currently the lowest that we've hit. And then the actual closes of those candles are about 62.8. This is very important because the highest monthly closing candles for 2021 were actually right around there. I believe 61. Actually, it's probably these, to be honest with you, 61.5. So it did close above the candle, at least above 61.5. which is a little bit of strength, like a little bit of support was formed there. Not a ton of volume there, so it was more the price just went as low as it needed to before, again, reenacting this consolidation pattern. So what we want to see now is, can we get strength at 68.6, or does it need to break down further? There's not a lot of key monthly levels here. I don't have any weekly levels written out either. So there's very little that's actually preventing us from another retest down to 59.9. And even, quite frankly, the middle band of the anchor VWAP, again, like once we have touched that, there's nothing preventing the price from continuing to break down lower and seeing if we need to touch the lower band. And the lower band is all the way down here at about 35K. Now, do I think we're going to teleport to 35K tomorrow? No, I do not. Do I think that is on the table for later this year? Yeah, I do. I talk about that quite frequently, that between 34 and 39 is quite possible as a bottom for this cycle. I did see someone who I respect quite a bit say that 28K might be the bottom. I don't know if I believe that. We will look at that on the weekly and monthly timeframes in just a moment. But that's what we want to look for now, is we need to see a positive reaction at 68.6. I do think it's likely that we're going to break it to the downside, and then may get some support at 67.5. Looks like we got all those candles right there that closed right at it. As well as these guys as well. This is kind of important, 68K on the nose. So we could drop down as low as there. If the SMA still stays curved upward, then that might be enough for us to continue chopping back. But let's go over the daily time frame real quick and talk about those psychological levels that I mentioned. So the key psychological levels that we're caught between right now are the 69K peak in 2021, as well as the 73.8K peak in early 2024. So what that means is we need to form support here, which again, you can see here. We're starting to fill out the anchor volume profile a little bit between about 66K and about 70.5K. Not quite enough to get to levels like above, where a lot of people bought in at around 87.6 and even at 95.8. So all of those people are currently underwater and are probably not feeling that great about it. So we have a ton of volume that we need to fill between 82K and about 69.6. Holy shit, that's so thin compared to the rest of the anchor volume profile. It's just not what you want to see for bullish pressure. It means that anyone, if we do get a rise up to 82, that means all of those people here are going to see that and think, okay, do I want to add to my position, or am I comfortable with a 5 to 10% haircut of what I put in, but at least I retain, 90% of the money that I put in at this time. That's the psychology of people who are newer in the market. A lot of this could just be DCA. A lot of this could just be people who understand the long tail of Bitcoin. I talk about this all the time. Anytime the price is below the weekly and the monthly SMA is a good time historically to dollar cost average, period. You will have to wait an extended period of time for it to actually be in guaranteed profit forever. But it's just, like, factually speaking, a better time to buy than when we are above it. So last year was not a great time to be buying Bitcoin, other than when we broke down below the weekly SMA in March, April. That was kind of the only good time to buy. And even then, we're currently below those prices. So it's hard to say. I think it really depends on your risk tolerance. It depends on your income, your expenses, and really like where Bitcoin sits in your portfolio. Do you think that it is a long-term hold? You do if you're smart, or is it just a trade for you? And if it's just a trade for you, then you have to be realistic that the downside pressure is a lot stronger than the upside pressure at the moment. So on the daily time frame, I think this pivot point is more important than the 4-hour one. The 4-hour one, like I said, is like 69.8 or something like that. It's 70.2K here for the daily time frame. And 70K in general is like a pretty important psychological level. We did peak at 69 in 2021, but 70 kind of formed as resistance. So if we can show strength at around 70, that's a good sign. That actually could lead to a sustained relief rally. But we are breaking down earlier than we did in previous cycles. Some of it lines up almost identical. Like the drop into the end of January into February is almost identical to previous bear markets, which we can take a look at. But for the most part, we want to see strength at 70.2K before we can get any higher. And we're still pretty far below that 73.8K initial 2024 breakout. And that is reflected by this monthly close at 71.3, which I guess is the actual monthly close instead of the wick for that time, which means that is actually more important than the 73.8K. I just like to say the 73.8K one because I think the all-time highs are super important for the narrative side of it, like the story side of it, whereas the monthly and weekly closes are actually more important for the chart. That's actually where the price is going to return to. So it's important to know both. So in this context, 71.3 is actually the one that we really want to take a look at. And as you can see, this is the first week of February. We wicked above that level multiple times and then broke down and failed it. We were holding on to the 70.2K pivot like Leonardo DiCaprio held onto that door. And at the moment, we've broken down below, down to, this is the 65.5K monthly close of, let's see where that is actually. So it's not 2024. No, I guess it is. Maybe that's a weekly close. Genuinely don't know why I have that drawn, to be honest with you. Let's see. It is a weekly close. That's why I have it drawn, which means it should be a different color. So that's what we're looking at the moment is a breakdown of that weekly close and are headed back to this monthly close at 65.5. It's a pretty long wick, so we have plenty of room for volume to come in here. But again, we are thinner below about 68.3K. Very thin below that, super thin. So we need to see a lot of volume come in, and that's not really reflected on the chart. Before I really go in depth on the weekly and monthly, let's go over to DeFi Llama real quick and get a look at the overall volume in DeFi. So we are in a downtrend since October in DeFi, like everything else. This chart actually does look healthy to me. That does mean that more and more people are using DeFi, even though it's like not an exciting time to use it. But what I actually like to look at is the ETF flows, which, as you can see, about $1 billion flowed out of the ETFs this week, and we only had about 26.8 million come back in on Friday, which is obviously considerably less than almost $1 billion, 920 million. So still a net loss of like $900 million, which again is a drop in the bucket compared to what is actually held in crypto. Is much smaller. The digital asset treasury companies as well, they actually tell a slightly different story where they are accumulating in January and February. So big sell-off in early February that we cannot ignore, but overall still pretty bullish. Like they're still buying. This is an interesting narrative because I think I was seeing people talk about how there's a possibility that MicroStrategy goes under and that the U.S. government will actually take over their assets, like they'll take over their Bitcoin. That's kind of the long tail of what's happening now, is the companies sort of acts as a vehicle for acquiring Bitcoin instead of the government having to do it. Because you'll notice, if you've been someone who's been paying attention to this narrative of the Bitcoin digital treasury reserve, what the hell do they call it? The Bitcoin reserve, I don't remember what the fuck the actual name is. It doesn't matter. They're using that as a carrot on the end of the stick to keep people in the market, when the reality is they're just going to continue to dump on it. So until we actually see some positive news where the government is actively buying Bitcoin instead of just seizing it from other people. They seized it from the Chinese hackers. They seized it from Venezuela. They have every intention, I would assume, if MicroStrategy were to go bankrupt, which it's my understanding that they are not going to. Like, as far as I'm aware, that's not going to happen. They won't get liquidated. One, they don't have to pay back their loan until 2028, so that's plenty of time for Bitcoin to keep dropping and then to recover. It will put pressure on them being able to raise more capital, but I'm actually of the opinion that they're not going to go out of business. I think a lot of the digital asset treasury companies will go out of business this year. I kind of see those as like the spiritual successors to Celsius, FTX, and BlockFi, which we probably won't see until I believe that Celsius was the first one. Actually, no, Voyager was the first one, and I think that was like March, and Celsius was like April of 2022. So that's kind of where we would expect to see more weakness in the markets, which I have talked about multiple times. And actually, let's go look and see what that looks like on the chart. So this is the weekly time frame. We'll look at the monthly first. Let's clean up this chart real quick. So we already are seeing similar seasonality here, where we were holding on tighter to the SMA in 2022 than we are now. As you can see, we have broken down below it in roughly the equivalent time period. In February, we're already way below the monthly SMA. Whereas here, we were still holding on pretty tight. In 2018, the last time that Donald J. Trump was president, we actually were able to stay above the monthly SMA for a long time in 2018. It actually didn't break down until about August. And we're not seeing that now. Again, we broke down below it, I believe, in November. November is the first time that we touched it. We held on to it pretty tight in December and then just failed it by the end of January. There was some hope that we were going to close above it, and that did not happen. And now we are below it, which puts pressure more likely towards around this essentially is what we're seeing on the chart now, is what happened in May of 2022, is we have already closed below it, and now we are in the middle and trying to see, can we get higher or not? And the February close is really going to be very important for that. If we can't get a close at least here, this is 82.4 or 84.4, that would be like the bare minimum for the price to get back there and to still have a hope of retesting the monthly SMA after that. That is looking less and less likely to me. Every time I make one of these videos, it looks less and less likely to me. So that was our previous hope. Our previous hope on the channel was that we were going to get another rise to 96K. I've been talking about that since December. That was my hope, is that we were going to be able to break back above and see one more failure at 96 before dropping lower. But it just doesn't really look like that. It does look like we're not going to touch the monthly SMA again. The monthly SMA is currently sitting at about 90K, and we'll be lucky if we get back to 80K at the moment. Even 80K is kind of acting as a ceiling at the moment. We peaked as high as 79.3K so far in February. So that's really what we need to see, is if we can't get any strength above, this is the 80K pivot, then there's no hope of us going higher towards that 96. I do still like 96 as like a possible like top of the wick. And the main reason why I say that is mostly because of, I talk about this a lot on the channel, the 47.6K pivot over here. As you can see, we were kind of holding on to that. We were really trying to get to that before a full breakdown of the monthly SMA. And I would imagine, I actually don't have pivot points for older than that, but I would imagine it's pretty similar for what's half of 48. Should be about 24K at this time. And you can see, what's that, 9K? Okay, so that actually doesn't extrapolate back that far. It would be a different multiple than that. So that was our best case theory, was that we were going to get another break to 96 before a full failure, but it just doesn't look like that at the moment. It looks more likely like we are over here in May, which means a prolonged failure probably into the month of March. And then maybe we bottom around that 64K pivot and start to consolidate. But I think probably more likely we're going to see a sustained drop. And it could just be that we see the push towards 50 and below earlier in the year than we would expect. I don't expect a full bottom still until about October. September is seasonally like very, very bearish for Bitcoin. It's pretty normal for September to be either flat or fairly negative. In these instances, it actually looks like it's still negative relative to the month before. So it looks like the drop actually comes in August seasonally. In most instances, not every instance. It kind of depends on where we are in the cycle. But where we are in the cycle now is a bear market. I hate to break it to you. It's like, I know people don't want to hear that. They want to come to YouTube and see all the bullish news of how Bitcoin's going back to 200K, but it's just not going to happen. So it's more likely, and this is really what we need to see, is can February close closer to the 76.2K pivot than the 64K pivot? If we close anywhere near that 64K pivot, there is nothing that is preventing the price from continuing to drop lower. Just nothing. It's tissue paper below that. So that's really what we need to see, is if we can get a close, even I would take 75.3K for the month. At least that gives us some hope that March could have a slight uptick to the upside, but it's looking less and less likely. It looks like we are going to consolidate in this range. So it's kind of between one of two scenarios. We're either going to keep chopping between, if we can stay above 59.9, we can stay above 64. We might just stay in that channel for a little bit, but the longer we're below the monthly SMA, the more likely that the floor is going to drop out below us at some point. So I am increasingly of the opinion that this January peak of 97.9 is actually the last attempt at 100K that we're going to see this year, and that the price is just going to continue to break down from now on, and that we won't see 100K again for the rest of 2026, which again, I know, makes you sad. It's okay. You're going to be fine. You're an adult, theoretically. So I would say the most important thing to remember in terms of narratives, which I talk about this a lot, is if the news companies could only run one story this year, which I noticed the important one last year that I was seeing pop up a lot through the second half of the year was, Bitcoin will never go below 100K. Bitcoin will never go below 100K again. So that told me, I already knew it was going to go below 100K, but that told me with certainty, oh shit, price is going to break down below 100K hard. If all of the news stations that are owned by the same two families or three families or whatever are posting the same news, it's because they want you paying attention and because they want their rich friends to know, oh shit, price is going to go down soon. So this is kind of the most important thing, I think, is 2026. The story for the year, if they could only run one the whole year, is how low can Bitcoin go? So let's take a look at that. And at the moment, we have this is the monthly time frame still. This is the Bollinger Band at the bottom. The Bollinger Band is sitting at about, let's call it 55K. So previously, when we have touched this guy, this is in 2022. I don't think we even touched it in 2018. We were still pretty high above it, which means it's tightening. So we're getting less volatility to the upside and less volatility to the downside, but the bands themselves are actually tightening. Which kind of just tells us that we're going to be range bound more than anything. So what we're looking for now is how quickly do we break down to that level before we can see it either round out and flatten. And if it rounds out and flattens, that actually puts more pressure to the upside. So that would be an instance where maybe we get a push above 80 and even to 96. But I think it's more likely we're probably going to see something like this, where it starts to round downward, which gives us permission then to continue downward. And the band itself will probably come down past here. This is 36.9K. I would imagine once we actually start to see a breakdown of price or further consolidation below 64K, that band will curve downward and start breaking through other key Fibonacci pivots. And all that's going to do really is going to tell us, like here, so this is about 15.4. Me personally, at that time, what I believed that the low point was going to be was somewhere between 10 and 12K. Like that's really what I thought was going to happen in 2022, especially I had lost my life savings in Celsius, which was very fun. Highly recommend. And just in general, like the FTX collapse, like it seemed like the world was over for crypto. when really it was just like a historic time for you to buy it, a great time for you to buy it. And the Bitcoin Fear and Greed Index is actually at like a lower point right now than it was even during that, which is insane when you think about like that's a pre-ETF world. That's a pre-US government having plans to buy it. That's pre-Brazilian government. All of these other countries now have plans to continue to amassing more Bitcoin, and yet we are still way more bearish on the monthly SMA than we've ever been before, which is just crazy to me. Like you have to be able to zoom out and think about what this asset class actually is, which again, I make this channel primarily to help you accumulate more Bitcoin, for you to have better analysis so you understand how the price is going to behave and you can make intelligent decisions for yourself. When should I be buying? When should I not? Based on this analysis and your own analysis. I like to teach people so you can do it for yourself. But what we really need to see, is if we can show strength above 64, which I don't think is a given, to be honest with you. I think it's just as likely that we show weakness there and continue to break down. That's just like the first sign that the bear market has really started, is that 50% retracement. And it's been higher in other ones. So we're actually lucky that we're only sitting at a 52% retracement from the all-time high at the moment. But that's going to continue to put downside pressure on the price, and that's what you should be anticipating. But if you think about it in the long tail of what this asset actually is, which I believe personally the main purpose of Bitcoin is for a future where credit becomes harder to come by. If we do have a major credit bubble, which I know a lot of people talk about, what's going to happen is, instead of them continuing to do unsecured loans and unsecured credit as the primary form of debt and borrowing, it's going to be asset-backed loans is where the world is moving towards, which means anyone who has a house, anyone who has gold, Bitcoin, hard assets of any kind, the banks are going to be more favorable to do business with those people than people who have a job and that's it. They don't have any other hard assets. So it's going to favor hard assets. And I just think that Bitcoin is a more predictable hard asset than a lot of those others ones. And it trades 24/7. And you can put in $1 billion and take it out tomorrow if you want. There's nothing preventing you from doing that. So I just think that there's a lot of signs that Bitcoin is where capital is going to flow disproportionately over the next decade or two. And what I'm really focused on is there's going to come a time 10, 20 years from now where I am retired, where I don't want to work anymore, and I'll have enough Bitcoin where I can go into JP Morgan Chase and say, hey, here is a portion of my Bitcoin. Give me a loan for it. I don't think that you should have them hold on to all of your Bitcoin. I don't think you should have all of your Bitcoin in one place in general. It should be spread out across multiple wallets just for, security and safety. But that's what we're looking for at the moment, is if we continue to see a breakdown, we'll see that reflected by the news. We'll see that reflected by the charts in general, that people have started to really lose faith in the other markets. And actually, let's go take a look at how's gold doing. So gold has broken down from its all-time high, but still looking strong. That looks way better than Bitcoin does at the moment. Why would you, a person with money and intelligence, why would you get out of gold for Bitcoin? It just doesn't make sense. It doesn't make sense. No one's going to do that. Let's take a look at SPY. SPY, very similar, where it's showing a little bit more weakness than gold, which what I've been noticing from the chart is it looks like SPY shows the weakness first and then gold will follow the weakness. So maybe, another week or two, we'll see some of this weakness reflected in the gold chart. But still way stronger than Bitcoin at the moment. Why would you get out of this chart to get into Bitcoin? It doesn't make any sense. Intelligent investors are not going to do that. Let's take a look at Ethereum. Ethereum looks terrible. Oh my God. Talk about something that you just do not want to hold as an investment. Ethereum is a trade. It's a trade. It's a trading vehicle. Or if you're someone who actually understands NFTs and meme coins, cool, then you need to have a bag of it. If you do not understand those things, you do not need to have a bag of it. You should just be holding Bitcoin instead. And in general, Total 2 looks pretty ugly. Not the ugliest, that's still pretty good. That's still money is flowing in over time into the asset class. We probably will see a further breakdown. I would imagine to at least these levels, but probably lower. I would imagine the bottom is probably somewhere closer to 500 billion. Um, it's tough to say. Well, actually, no. I guess here that's like 427 billion. So we would expect there to be strength above that. This is looking like 760 billion. Could be important. It's tough to say. I do think that the narrative will flip at some point where most of the money has been in Bitcoin for the majority of the time since about 2016. That's when it started to drop off and started to flow into the other altcoins and everything. But a lot of that was just based on liquidity. I talked about this in the Japanese yen carry trade. A lot of liquidity was available to us in 2020, 2021. And that's why the prices did what they did for the altcoins and everything else. And we just don't have that liquidity anymore. So it's not really that strange that we got basically a double top from 2021 to 2025. Wasn't really any new ground made, like the peak here is at 1.77 trillion, and the peak in 2021 was 1.71 trillion. So hardly what you want to see for bullish altcoin pressure. And we, quite frankly, we may never see the same type of run as 2021 ever again for altcoins, which again, I really think just lends more credence to like, why are you looking outside of Bitcoin for specifically store of value? If you're just trying to keep the amount of money that you put into the market, it's probably going to be better served in assets like gold, the S&P 500, and Bitcoin than it is in, as you go further and further down the crypto list. You're just giving away your money, and especially if there's anything I learned from this cycle so far, it's that Solana is like basically the casino that's going to allow people to legally rinse you. Kanye West, Donald Trump, the Haktua girl, like all of these people are just like, they now have a legal way for them to launch something that has no inherent value at all, that they can pump at any given notice and then rip out the money right after. It's just really, it's making it easier for people to get rinsed. And this to me is the only defense against that. Here's another example of XRP. I think XRP is like the worst one, man. Like, you do not want to invest in anything that looks like that. Like, that's terrifying to think that you could go for years where the price is doing nothing and then it randomly shoots up. That means you got to wait like 3 years of boredom, of telling your family that this is going to go up one day. This is going to go up one day. Like, it's just insane to me. So me personally, I won't be buying until October of 2028. In October of 2028, you will hear me talk about, I'm going to buy a little bag of XRP. But other than that, I'm not touching it. It might make sense to short it. Probably a decent argument to short it from here. Like if it goes back to those levels, which it does seem like it consolidates pretty hard, even if it just goes to, where's this guy? That's to the top of that range. So even if we were just go to there, you're still talking about like a 65% retracement still from where we are. And again, we've already dropped down. We've already dropped down like 70%. So we're talking about potentially another 70% drawdown from where we've already drawn down. So from the actual top there, that would be, 79% total, which is just not good. It's not what you want to see on the chart. Just a dramatic further breakdown. So actually, I guess it's not another 70%. It's closer to another 50% that we could go, which would be whatever, below $1. I would think, this is not investment advice, I would think it's pretty clear that XRP is at the very least going to drop below $1. So I think it's reasonable to take shorts from where we are now to $1 over the course of the year. Now, I don't know exactly when that is. I don't really study the XRP chart. I kind of don't give a shit. But it's pretty much the same for everything else. For Coin, for Hood, they're looking ugly. Hood's an important one, I think, to pay attention to now based on how it performs at its monthly SMA. As you can see, if it behaves like Coinbase, it's going to break right through it. But all of these are kind of just leverage bets on Bitcoin. If Bitcoin is still struggling, there's no reason to believe that any of these are not going to continue to struggle. The one sign is here on the Bitcoin dominance chart. This means if we continue to see money break down here, then money will start flowing out of Bitcoin, and it needs to go somewhere. And it may go to utility coins. It may go probably to stable coins more than anything. As we saw on the DeFi Llama chart, the stable coins are actually flattening right now, which is basically they're just waiting to see what happens. People are waiting to see, should I allocate more to Bitcoin? Should I allocate more to shorts? With prediction markets being legal now, I really think that like a lot of the liquidity that would have flown into altcoins just doesn't belong there anymore. And that's just now. Wait until we get tokenized assets. Once NVIDIA and Tesla and all of these assets are tokenized on the blockchain and they can trade 24/7, then you wait and you see how much liquidity there actually is for altcoins. It's going to be bad. It's going to be pretty ugly. So surprisingly strong actually on the Bitcoin chart for where we are in this cycle. We haven't really seen the breakdown that we have in the past, and this actually looks healthier to me than here. These are more violent swings, and that's just not what we've really seen. We saw a steady rise. We'll probably see a breakdown further. I've talked about before, I believe that this chart is essentially just going to like get thinner and thinner and thinner and thinner, the actual range that it goes to. We're never going to get back to 90% Bitcoin dominance again. It's not going to happen. Nor do I think that we're going to drop down to 40%, but it's probably going to, I mean, it might touch 40% again, but I think it's more likely that it's going to bounce between 50 and 65-ish percent. Up here was about 73. I think that's going to get tighter and tighter over time because more and more money is going to flow into crypto in general, as we saw on Total 2, as well as the DeFi Llama chart. More and more money will flow in general, and not all of it is going to flow to Bitcoin, but roughly half of it is always going to be in Bitcoin itself. And that's pretty much it. We just have to wait now. Like we need to see some strength at the levels that I mentioned earlier in the video. I do think that it is more likely that we are going to consolidate in between the 64K pivot and 76.2K pivot. And the longer that we consolidate there, the more pressure that we are going to have to the downside. And the actual low targets, like I said before, I think it's somewhere between 34 and 39K. Where do we see that reflected on the chart? This is about 37.6K. Top of these candles is about 45. What is this pivot? 34.4. So just in there in general, I think this is the top of the range. It's like 31, 32. If we go back to this guy here, bottom of 2022 is 15.4. And where was the top over here? This is the 2019 like early peak, which I don't think was normal for then either. And that wick only goes to 13.8. So we basically held support above the lowest or above the highest wicks of the previous pre-halving year. So if we take that to be here, that would be, this is 32, which means we could expect a bottom slightly higher than that wick if the price is still strong. So that's why I say that 34 to 39K level is this wick here is at 31.8, which means we would expect that to form essentially like a floor of support where price is not likely to go there and will probably stop before there. This is a previous pivot, that 34.5-ish. That could very well likely be the wick that we go down to. 36.9 is also popping up. We're not going to see 10,000. I don't know why that one's even there. That's just silly of the chart to tell us that. So that I do think is still going to take until October. I don't think that is going to magically happen now. So in general, I wouldn't be like overloading on shorts at the moment while we're in this consolidation phase. We probably do see a breakdown into March, more likely than a rise back to 96. I'm so sorry I said that in December. I really wanted that to be true. I don't think that it's going to be true at this point while we are below the monthly SMA. And our best case scenario is really just if we can get back to the monthly SMA, which we don't have any precedent for. It's never happened before. So unfortunately, it's not likely to happen now. It's more likely that we see it next year. That's typically when it will happen, which means we'll continue to see a breakdown towards that 44K pivot towards that local bottom at maybe 35K-ish by the end of the year. And then we will start to see strength come back up it. And then probably won't see the monthly SMA again until somewhere between April and June of 2027. As far as I'm aware, the stablecoin bills go live in January of 2027, regardless of whatever they're doing with the crypto market structure bill now and all of the arguments that they're having right now about the banks are trying to nuke the ability to have yield on stablecoins because they want people just to spend more with the stablecoins. They want it to be transaction based instead of yield based. Because that threatens their business model for high yield savings and CDs and bonds and all the other things that banks do that are inefficient, relevant to what crypto does. And they don't want that. They want to continue to control it. I saw that fucking JP Morgan Chase took like a $700 million fine for manipulating the commodities markets between 2008 and 2016. Do you know how much money is in the fucking commodity markets? Like, we're talking about tens or hundreds of trillions of dollars, and all they got was a $720 million slap on the wrist. It's a joke. Like, they're going to do whatever they can to manipulate these markets, and Bitcoin is no different. It's 24/7 that people could trade it, which means that they can push it down whenever the hell they want, and they will do that first before they do the other markets, because it's just easier for them to do it. So, for me, anyone who's telling you that we're going to see new all-time highs this year is a jackass. Like, I don't think that's going to happen. Personally, I think there's no precedent whatsoever for that to happen. Even if they do pass the crypto market structure bill, if for whatever reason they're able to get it done before, I think it's the July deadline is where they like actually need to have it done by. It's quite possible they take all the way till then and they still don't reach a favorable deal and they kick it down the road further. I would not say that this administration has been known for getting things done on time or well. So it's more likely that that's what we see is a sustained breakdown, slight periods of consolidation, but the overall trend is lower still. So what would I be focused on? I would just be focused on increasing your income other ways. If you are a proficient trader, there's a lot of opportunities for shorts. I would be careful about longs where we are right now. Because again, like I said, I was really hoping for that raise back to 96 and we got it. We got it in January. So I was correct that we were going to get it, but I was hoping that we were going to get a second one, and it just doesn't look like that. It looks like that was the major failure, and now we are into essentially May of 2022, which means further breakdown. And into June. June wasn't the absolute bottom, but it was pretty close. I mean, the bottom there, 17.5, and I don't think you would give a shit if your average cost was 17.5 versus 15.4. Like maybe you did in 2022, but right now, would you care? No, you would not. If your cost basis is below 20 grand, you're chilling. You're still at more than 3x your money, 3.5x your money. So that's what we need to remember in context is you don't buy Bitcoin for what it's going to be worth tomorrow. I mean, maybe you do, I guess, but you buy it for what it's going to be worth multiple years from now. And the reality is if you bought it at the top, you got to wait 5 years for your Bitcoin to be in profit again. If you buy it sort of in this breakdown, then it's more likely that you have to wait. This is 2022 and we're in 2026. So essentially 4 years where the price will go above and then it'll drop back to it. But then after that 4 year time period, you're in profit forever. It is at least fundamentally how the prices work till now. It's always possible that the floor cuts out. And I'm going to end this video because I've already been rambling for a long time. But I have talked about in other videos, I think the possibility of an extended bear market in the middle 2030s, which we will have so much time to talk about that later in the decade. But I do think just based on what happened with gold, how gold will spend a big time rising while stocks and real estate are consolidating or struggling. Gold will rise through that and then it'll drop off and start to bottom and consolidate for really long periods of time, like up to a decade. And I don't think it'll be that long for Bitcoin, but I think if we do see my theoretical time that we reach 1 million was 2033. I know a lot of people said 2030, but whatever, 2030 is a bear market year until proven otherwise. So I don't believe that. 2033 would be the actual peak year. But if we see a failure to get to 1 million there, say we get to like 800 and it just like can't go any higher, that may actually put sustained pressure back down towards 500K and lower. Which again, right now, sitting at 68.9K, like what the fuck is the point of even talking about Bitcoin in a theoretical bear market way in the future in 2034? But that's what I would be looking for there is, a potential breakdown and continued breakdown instead of what we're used to, which is we see a breakdown and consolidation, then it rises, and then it rises, and then it drops, and then breakdown and consolidation. So that's what I would be looking for once the AI narrative has like really reached full maximum. Once like most people don't have jobs anymore and we're not really producing income the same way that we used to, that is going to put a lot of pressure on Bitcoin. That is really going to like take out a lot of the steam in its engines, for keeping the price going higher and higher. I do think that anyone who buys below about, I would say 200K. But realistically, anyone who buys under 100K, you're chilling, dude. You're absolutely fine because you're going to get in before the major governments come in en masse. And we haven't even seen like the major like chess move that the U.S. is going to do to revalue their gold stack. And they're going to push a lot of that into Bitcoin, I think. So that's it for this video. I would be paying close attention. Let's just go look at the 4-hour chart one more time for anyone who is still watching, which you're a legend, by the way, if you are still watching at this point in the video. We just want to see a reaction to 78.6K. If we can get strength there, cool. We take another retest towards the 70.2K pivot. I'm just going to ignore this 69.8K pivot. It's not as important. So we get another retest towards that 70.2, and then same thing. We want to get strength above 71.5 and 73.8K psychological. And if we don't, then we're just going to continue to break down further. I do think that the middle band is super important. I talk about this all the time. The best way to do this is to take the Anchor VWAP tool, go all the way to 2011, find the lowest candle on your Bitcoin chart, place it there, and then it just gives a lot of great information. Like I have not moved that for literally like 5 years, and the price went exactly to it. That is the power of a strong indicator. That's why you don't need like a million indicators. You just need a couple. So look for strength at 68.6K. Otherwise, be prepared for a further breakdown. And then there's very little holding us above 66 and about 64K. And we should not treat the middle band as like an absolute form of support. It's more likely that it continues to break down because that's just what happens historically at this time in the market. Thank you so much for watching. I will see you tomorrow in the newsletter as well as the video that goes over the newsletter. Have a great day, everybody.